Hello friends, this is Vaman Gokhale and I welcome you to this e-learning series of audio PPTs on credit aspects. I have deliberately named this particular sessions as 15 minutes of learning. The caption itself suggests that if you invest 15 minutes every day, I assure you that within 100 days, you will be a skilled appraisal and will be able to handle any type of loan proposal, may it be for the working capital or the term liabilities or term loans or non-fund based business. So let us begin. Today's is the first session and the first tutorial, that is इसे हिंदी में अनुशिक्षण भी कहते हैं. The first tutorial we are beginning today with the CMA data. Credit Monitoring Arrangement, CMA. CMA data, that is Credit Monitoring Arrangement data, it is a reflection of the past performance and the future financial projections of a borrower. It helps the financial analyst as well as the bankers to ascertain the financial health of a business and to arrive at a credit decision. The genesis or the roots of this CMA data, which we are going to discuss in details, it is directly linked with the CAS, that is Credit Authorization Scheme, which was introduced by Reserve Bank of India in 1964-5. It's a very old scheme. Then, that is at that time, the credit was a scarce resource and hence RBI was regulating the credit. As such, under the CAS, that is under the Credit Authorization Scheme, pre-authorization was needed from Reserve Bank of India in respect of borrowers availing limits of rupees 1 crore and above from the banking system. As such, in respect of these borrowers who were availing limit of rupees 1 crore and above, it was needed that before communicating the sanction, the banks would submit, that is, they would have to submit the proposal to Reserve Bank of India for clearance, that is pre-authorization. And only after authorization, the banks could go further, communicate the sanction, and then the borrower can avail the loan after completing the formalities. So this was the system in respect of pre-authorization, that is CAS. These limits, that is earlier the limits were 1 crore in respect of which the pre-authorization was needed. But this amount 1 crore was then subsequently changed several times, and ultimately the system of the CS, that is credit authorization, means prior authorization, was subsequently discontinued. In 1974, the Tandon committee was formulated and it suggested the guidelines for working capital assessment and the follow-up of the bank credit and submission of the data for credit appraisal. These committee suggestions are also applicable as of today. Such a scientific way, how the Tandon committee has suggested the method of appraisals then. The data in respect of the bank proposals, that is the credit proposals, it was further refined by another committee, that is the Chore committee, and then the CAS, that is Credit Authorization Scheme, the data and the CMA data, they were entwined into one. Reserve Bank of India instructed the banks to submit the CMA data for post-sanction scrutiny. Means earlier what was required was the pre-sanction scrutiny, but afterwards the RBI had changed the system from pre-sanction, pre-authorization to post-sanction scrutiny, means after sanctioning of the loans in respect of working capital limits of rupees 5 crores and above and term loan proposals of rupees 2 crores, the banks have to communicate to the RBI about such type of sanctions to the Reserve Bank of India under the CMA data. Thus, pre-authorization has changed into the post-sanction scrutiny by Reserve Bank of India. Ultimately, this particular system also, that is submission of the data for post-sanction, was also discontinued since 1989 with the advent of LPG, that is liberalization, privatization, and globalization. Now, as in the present situation, RBI undertakes the scrutiny of large borrower accounts under the AFI, that is Annual Financial Inspection. However, my dear friends, the CMA data is, I will say, the heart of appraisal in respect of the banking loans. Rationalization of the scheme. Reserve Bank of India has advised the commercial banks since June 1970 to collect and examine the data relating to the following aspects. The first and foremost is utilization of the existing credit limits by the borrower. Then the total working capital requirement and the permissible bank finance together with the borrower's ability to meet the gap between the two. That is, what will be the sources in respect of the margins or the contribution in the form of NWC, which is to be brought in by the businessman in his business. Then comparative financial position of the last 3 years, that is last 3 years audited, current year estimates, as well as the next year's projection. This data was required under the CMA submission. Then the cash flows in respect of the term loans, the deferred payment guarantees, the cost of the project, and means of finance in respect of project loans, particularly when a bank will be taking a long-term exposure in the form of the term loan or a deferred payment guarantees. Credit monitoring arrangement data. Now let us understand how the CMA data comprises. It comprises of 7 different statements, of which the periodicity is last 2 years actuals, that is they are called as audited, the current year provision or estimates for the current year, and the projections for the next year. The part 1 of this particular data is the particulars of the current and the proposed limit from the banking system, and it includes the fund-based and the non-fund-based facilities. This is a basic document and it spells out how the various limits under FB and NFB were utilized during the last years, as well as what will be their requirement, that is future requirements. In short, it is can be said to be a proposal for the credit facilities. The part 2, this particular state is an operating statement and always this is called as a speaking statement. Why? The answer is very simple. It is the operating plan of that particular business and it shows about the sales which are already achieved, and of course, and the projections also achieved, the growth which will be achieved, the cost of the production, the cost of sales, the gross profit, the net profit, and how the net profit was distributed, etc. Thus, it is the scientific analysis of the existing and the future cash flows and the profit generating capacity of that particular unit. We are going to discuss this aspect in details during our discussions. Then the part 3. The part 3 is an analyzed balance sheet. or the balance sheet spread. These are the two names. It is in fact the classification of various items of the balance sheet in a very scientific way and which will be suitable for interpretation by the bankers. It reflects the position of the current assets, current liabilities, the term liabilities, the fixed assets, the non-current assets, intangible assets, and the net worth of the borrower. It reflects the complete financial position or the financial health of the borrower. The fourth part of the CMA data, it is the comparative statement of current assets and current liabilities. By viewing this, one can easily understand what was the amount and the number of days of the current assets which are required and what are the current liabilities and also which can be reflected in the number of the days. So comparison will show or will enable a banker to take what will be the position in the future. Then the part 5, it is a calculation of maximum permissible bank finance, that is MPBF, or sometimes it is also called as permissible bank finance. This statement undertakes or makes it easy to fix the working capital limit for the borrower. Part 6 or the part 6 of the CMA, it is a funds flow statement and it depicts various sources of funds and where they are deployed. In this statement, the banker studies what are the short-term sources, what are the long-term sources, and how the short-term sources and the long-term sources are utilized. Basically, a banker should look that the short term, that is some of the short term sources uh, should never be utilized for the long term purposes. I mean, a banker has to be very vigilant and he should see to it that the short term uses, that is current assets, are entirely financed by the short term sources, that is current liability, and some part from the long term sources. Then part number 7, it is the ratio analysis. It gives the key financial ratios and the working of the current ratio, the debt equity ratio, the gross and net profit ratios, current ratios, then quick ratios, and all these ratios, they reflect the financial health of the borrower and helps ultimately to a credit appraiser to take a decision. Now, what is the importance of the CMA? The CMA data, it is basically an application for credit facilities. Secondly, the ratios and other data reflects the financial health of the borrower and it is useful for working capital requirement of the borrower for the future period as well as how he has availed those limits during the earlier years. Then it is a tool to control or monitor the sanctioned limit of the borrower. Thus, my friends, we have discussed in this module about the gamut of the CMA data and therefore we obtain this particular data in order to appraise the loan proposals. Thank you very much.